Welcome to Author's Note. Our subject today is one of the most pressing questions facing the world economy, the future of China and its development. With us to discuss this issue is Michael Pettis, a former Wall Street banker and now Professor of Finance at Peking University. Hot off the presses is Michael's new book, The Great Rebalancing. And here he is to talk about his view of where the Chinese economy is now going to go. Michael, if we look at this chart, we see how fast the Chinese economy has grown in the last decade, including, despite a slowdown, through the global crisis. Now you think that things are going to look quite different in the next 10 years. Can you tell us why?
Well, in fact, you can already see it from the graph. The economy has grown very, very quickly because it's been driven by huge levels of investment and rapidly growing levels of investment. Unfortunately, as more and more of this investment is being misallocated, malinvested, wasted, debt levels are rising more quickly than the debt servicing capacity. So at some point, China has to constrain credit growth. And when it does so, growth rates are going to slow down significantly. And we saw that in 2012, although growth rates overall look quite good, 7.8%. In fact, we had much slower growth in the first half of the year when there were attempts by Beijing to constrain credit growth. Growth slowed down so much that there was a great deal of concern, and they sort of stepped on the credit accelerator again, to the point where in the month of January we may have had the biggest one-month increase in credit we've ever seen before. But clearly, as credit grew, so did GDP growth, and we saw in the second half of the year GDP growth jumped up again. So it's very clear that what drives growth in China is growth in debt, and the growth in debt is not sustainable.
Yes, if we look now at the next chart, this supports your argument. Here we've seen investment growing and growing as a share of GDP. Now, looking into the future, and given what you've said about the debt and the non-productivity of some of that investment, what needs to happen to rebalance the Chinese economy?
Well, they have to bring investment levels down. Too much investment is being wasted, and I think that's pretty well understood within Beijing. But if they bring investment down, then the only other sources of growth are the current account surplus, which I think we can all agree is not likely to be a major source of growth, and domestic consumption. But in order to get domestic consumption to go up, you've got to get household income to go up just as quickly. And that's the big problem that China faces. It has to increase household income rapidly, even as it's bringing investment levels down quite rapidly. And the only way to do that is probably through direct transfers of wealth from the state sector to the household sector, which is politically very difficult to do.
And while that's going on, what will happen to overall growth rates?
Overall growth rates will come down significantly. I think there's, in my mind, there's no doubt about that. The only question is how much. My guess is that over the next decade, it's unlikely for growth rates to exceed, on average, 3 to 3.5% without making really implausible assumptions about consumption growth.
And that assumes, though, that the Chinese authorities can manage this transition in a successful and smooth way. What happens if they don't?
Well, if you look at the historical precedents, they're fairly gloomy. Quite a number of countries have had investment-driven growth miracles. In fact, I think Brazil in the 60s was the first country to be called an economic miracle. Every single one of those countries, without exception, has had a very difficult adjustment period. And of all of the developing countries that have gone through this, I would argue that perhaps only one country, two if you include Taiwan as a province of China, plus maybe a third, have really done it successfully, and that's South Korea, Taiwan, and maybe Chile. So it's a very difficult process, and the historical precedents suggest that it isn't obvious that China will get through the process.
Thank you, Michael. So there you have it. China faces some very difficult challenges in the next decade. It has very few countries from which it can draw examples. Mr. Pettis' argument might be a bit pessimistic in the view of many economists, but it's no longer a pessimism that's ignored. It's taken seriously, and it needs to be.